Hello and welcome to another update video about silver. Yeah, on the silver chart, we've seen a dip into the larger support zone. This correction on the silver chart really has taken a long time. We could still see another low. I mean, essentially this here is not a concrete floor, it's just a support area, just a pivot below which an upside follow through more directly will become less likely. But we could still see another low as long as we don't get a sustained break below $27.33. We might see another low just below it, but not a sustained break, as I said. And the invalidation point for this 1-2 setup that we've been tracking, wave 1 to the upside in 5 waves from the 2nd of May low, which peaked here around $32.50. The invalidation point is down there, yeah, the $26 level. So while this is a support zone below which ideally such a wave 2 correction shouldn't go, again, it's not a concrete floor and the trend is still down. The trend is still down. We could still see lower lows, but I'm watching for a reversal now because we've entered the support zone and we have the number of waves required to call that move down complete. Futures are open and let's take a look at the chart. By the way, before we talk about this structure here in detail, if we go down lower and form, let's say, more than one more low and we get a sustained break below 27.33, especially if we get invalidation, I will have to assume that this, in an alternative perspective, this A wave is up here. This is a B wave in an alternative perspective. It would allow for more downside, but still within an overall bullish scenario. I mean, earlier today, someone in the comments asked me what happened with the year of the metals 2024. I mean, what happened? I mean, this year, I mean, silver has really only, well, it's performed really nicely. It's performed really, really nicely. This is just a correction at the moment. That's the assumption, yeah? So, I mean, from the January low, this chart moved up 50% to the top. Of course, it needs a correction. We see that correction at the moment, and it's all good, yeah? It's all good. I see this, however, here as, this needs to sit here. So I see this as a C wave rally to the upside now in wave 3. And the idea is this is a 1-2 setup, okay? So wave 1, wave 2, and then we could get, I haven't labeled the whole thing, but we could see wave 3 of C, then a 4 and a 5. I just have to move all of this across because this correction in time has stretched out quite a bit. So just to show you, maybe for the next video, I will label it if we see first signals that we're breaking out of the range to the upside. Wave 1 up, ABC in wave 2, wave 3, wave 4, wave 5. This is how it would ideally unfold into the $40 region. And that would just be a natural, let's say, progression of this year of the metals that I talked about. So, but also last year was pretty good for the metals. You know, remember, it's not crypto. It's, you know, it's the metals. Can still go nicely, you know, when we're in a trending move, but corrections are frustrating like they are in crypto as well. So obviously the idea is that if this wave 1 topped here in May, this was an A wave down, a B wave rally, and then a C wave down. We've seen 5 waves to the downside. Looking at the 1 hour chart, we were oversold on the 1 hour time frame. We've even seen a bit of a bullish divergence there. Looking at the 4 hour time frame, we were oversold. I believe we talked about that in the last video. Maybe it was the gold video, but they are quite similar anyway. We now see also the MACD turn and cross bullish on the 4 hour time frame. So we see bullish signals start. The 1 hour is about to cross here, the 0 line on the MACD, and I'm just watching for a bounce. I'm watching for a bounce from here. The wave count to the downside is technically full. You can never rule out one more low, right? The microstructures are way too messy for that, but that's why I'm giving you the initial resistance area. So if we now see a break above $28.42, and we have a good start to the week already, $28.42, that would be a break above initial resistance. It needs to be a sustained break, so we want also a break above the trend line. Ideally, this trend line I'm watching, and yeah, if we get a break, especially if it's a break above the trend line as well, especially if it's a break in 5 waves as well. So far we only have 3 waves up. then this could be really something more bullish in the beginning of the next rally to the upside. But again, it's only a 3-wave move at the moment. So I would call this a possible, and this is now a bullish perspective, a 1-2 setup. We could now be in a 3rd wave. Then we want to see a 4 and a 5. If we get these 5 waves, that would be the next level of confirmation that we've really bottomed here on Thursday last week. Until we see that, I cannot rule out one more. You can never rule out another low, but probabilities for a low are quite high, as long as we only have 3-wave rallies. I think the potential for a bounce is high, but bear in mind there is resistance. And if the market can develop a 5-wave pattern, and if we can see that the 5 waves actually reach the 1.618 extension at least at $28.70, so it should be like that pretty much, or higher, then this chart is likely turning bullish again also in the short term. So watch for this. Obviously, the invalidation point for this white microstructure is the $27.55 level. That's my update about silver. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, feel free to check out our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.